and it probably will. Gold in 1970s, from 1970 to 1980, went from $35 an ounce to $800. That's a much bigger move than what we're talking about to get to 10,000. In fact, in the first decade of this century, between 2000 and 2011, right, 2001, 2011, gold went from under 300 to almost 1900. So from here, the move to 10,000 is smaller than that. And why can't the Dow go back to 10,000? I mean, that's just back to where it was, around the bottom of 2008. In fact, it was lower than that in 2008. Most of the world's foreign stock markets have gone down there. Why can't ours? We're even more overvalued than they were. So I think the probability of a 1-to-1 ratio is there. That's what's going to happen. Also, by the way, I've been talking about this with all the World War II references. The most the stock market dropped in World War II was 30%. That was it. From the highest in 1941 to the low in 1942 was 30%. We're already way more than that. And this is just getting started. This is nowhere near as bad as World War II. That just shows you how much more overvalued the market is now than it was in 1941, and how much weaker the economy is now than it was in 1941. Next question. Do you envision, this one is from Alan R. Okay, now I actually got a name. Alan R. Paid $50 to ask this question. So I'm going to give a $50 answer. Do you envision the gold-silver ratio going much higher? 150, 200. Right now it's over 100. Look, obviously it can go higher, right? Because it's in uncharted territory. So the odds are that the ratio will continue to move in favor of gold, meaning silver will get cheaper and cheaper in terms of gold until there's a massive reversal. You can only stretch a rubber band so far. I think right now silver is falling with other industrial metals, but it is not just an industrial metal. It is a monetary metal. And when it reasserts that monetary relationship with gold, you're going to see an incredible silver rally. In fact, we already can see this. It's not just at my company, Schiff Gold, and here with the Perth Mint, but the real demand for silver is soaring right now. Even as the prices are dropping, demand is rising, which is what you would expect. When the price of something goes down, people should want more of it. So it's only in the financial markets where people are levered up and have to meet margin calls somewhere and need liquidity that they're selling their silver. People in the real world are buying silver as fast as they can. And that is indicative of what's going to happen. So there's an old expression about not looking a gift horse in the mouth. And as far as I'm concerned, we've had a gift horse buying opportunity in silver for a while. Don't know how long it's going to continue, but take advantage of the opportunity while it exists, because one morning you're going to wake up and the sale's going to be over. And I think the price of silver will have gone ballistic. Next question is from Stefan Folk. Why is the minimum deposit for my SMA 100K? Would you mind to change it for us poor people to 25K for your gold fund? By the way, anybody can buy my gold fund that lives in America. You don't need an SMA. That's a separately managed account. I have wrap accounts, right, where there's a $50,000 minimum where we manage a portfolio of my funds. But if you just want to buy one of my funds, you can buy it. You don't need, the minimum is $2,500. So any American can go to europacificfunds.com and follow the instructions and buy any one of my funds directly from the fund company. The minimum is $2,500. That's it. You don't even need to talk to a broker. Just go online and follow the instructions and do it yourself. So if you're a small investor, $2,500 minimum, that's for you. Also, if you already have an account at Schwab, Fidelity, E-Trade, a number of funds, you can go put a $2,500 investment in any one of my funds in your existing account, especially my gold fund, which is the one that I'm the most positive on in the short run. But obviously, if you don't have $2,500 to invest, then you can't get into the fund. But if that's all you have, just buy yourself some physical silver. You don't need a fund if your portfolio is that small. Anyway, I hope I answered that question. Next one is coming from Chris Primer. Do you believe the U.S. government actually has 20 tons of gold that it claims it has? Look, I don't believe anything the government tells me. I just assume when the government tells me something, it's lying, right? The minute the government denies something, that's when I start to believe that it's true. But you know, I don't know. I mean, maybe they do, maybe they don't. But it would not surprise me if we have been exaggerating the amount of gold that we still have. I mean, maybe we've already sold it off. I don't know. But you know what? I hope we have it. As an American, I hope we still have it. But if we don't, then it's going to be even worse than I thought. Next question from Ashat Avak. Hopefully I pronounced that right. Why would you buy a company right now that guarantees returns of 30%? Daycare, supermarket, FedEx, etc., or put it in the market? Wait. Who guarantees a return of 30%? I mean, nobody guarantees a return of 30%, so I don't understand it. I mean, there are some stocks maybe that are yielding 30% just because the price has crashed and they used to yield 5%, but now the price has collapsed, and so they supposedly yield 30% based on what they were able to pay as dividends in the future. The problem is they're going to cancel those dividends because they shut down operations and they have no revenue, and all they have is a pile of debt. So I do like buying dividend paying stocks, but you got to make sure that the companies have a good balance sheet and they can withstand to go without revenues for a while. And maybe they have to cut their dividend in the short run, but they'll be able to reinstate it in the long run. And I'm buying stocks for the long run, not for the short run. And I'm buying them to own real assets because I want to get out of dollars, because I think the dollar is going to collapse and become maybe worthless based on all the dollars that they're going to create. Here's a $50 question from Alan R. All right, let's see. Do you envision the gold-silver ratio going much higher? I could have sworn I answered that question already. Yeah, I mean, somebody already asked it, so kind of hate to take the money to answer a question that I already answered. But I guess I can expand on it. Look, keep buying. I mean, look, one thing that's interesting, though, and this is maybe part of the question, should you sell some of your gold to buy silver? Right? That's because let's say you've got all the precious metals exposure you want in gold and you don't have any silver. Should you take some of your gold and buy some silver? Absolutely. I think you should take advantage of the massive decline in the price of silver relative to your gold, and spend some of your gold buying some silver. I think that's a great trade. In fact, my guys at Schiff Gold can help you do that. We can buy back your gold and sell you silver as part of the same transaction. So instead of paying for your silver with money, you would pay for your silver with gold, which is money. You'd be using your gold money to buy some silver while it's on sale. So that's something that I would suggest. And if you do that, I think you'll more than make up for the $50 you spent on this question. The next question is a $100 question. This is the most expensive question that I've answered. Maybe there was another one, so I got to be on my best here. Let's see. What would you do if you are holding deep in the money options on gold and silver and want to ride the exponential returns, but afraid of the market being closed? So if you've got deep in the money call options on gold and silver, if you're really deep in the money, there's no real point in holding them because you're not going to get any more leverage at this point. So maybe you can close out the position and just hold the physical. If you have the ability to do that. I mean, maybe you don't have the cash in the account to exercise, but you can certainly close out the position and, maybe buy some options that are no longer deep in the money, that are out of the money with a small percentage. I mean, don't, leave all your money on the table. Put most of your winnings in your pocket by buying real physical gold and silver. And then maybe, if you want to continue the upside, buy something that has a lot more leverage, but spend a lot less money. So you have a lot less at risk, right? Because you have most of your winnings in your pocket. If you throw a 7 and, you're not going to lose everything, just whatever you left out there. But yeah, that is a good point. What if they shut down the exchanges and, you have no ability to trade? I mean, that is always a risk. And there's also counterparty risk. I mean, what if you're long gold options and the guy who shorted them to you is bankrupt and can't pay? What if the exchange goes out of business because the counterparties don't have the money? Hey, if I turn off my volume, maybe that's my son. He tests me a lot.